Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have David Axler, Chief Strategy Officer of Wave, Christine Simone, Co-founder and CEO of Caribou, and Simon O'Shea, CIO of Ballast Rock. They join us to discuss the shift in VC investor landscape and what that means for startups trying to access funding. It is great to have all of you with us. Thank you for joining us on Trade Talks. David, let's start with you. We'll go around the horn here. Give us a brief introduction in terms of where Wave sits within the startup and entrepreneurial ecosystem.
Yeah, thanks for having me, Jill. So Wave is a business management platform that really is at the start of most entrepreneurs' journey. We are a business platform that helps users get a picture of their financial health through accounting, getting paid through invoicing and payments, and then helping them pay employees through payroll. So we're right at the heart of what many small business owners and entrepreneurs are doing with on a daily basis.
And Christine, how is Caribou working with entrepreneurs and startups?
Well, we're actually a Wave user. So hi, David. Good to be here with you today. We actually work with business owners in the context of financial professionals. So your wealth managers, financial planners, to assist in delivering better guidance around what healthcare costs are expected to be, predominantly for retirees, and helping them find better health insurance plan options. We're an earlier stage company, so really understanding the VC landscape at the early stages of the startup journey.
Right. And Simon, tell us about Ballast Rock.
Sure, Jill, and thanks for having me on today. So Ballast Rock is actually a diversified financial services firm, and we operate across three primary verticals. Number one is a wealth advisory business called Ballast Rock Private Wealth that offers family office services to modest to high net worth individuals, including successful startup founders. Number two is a FIN-registered broker-dealer called Ballast Rock Capital. And number three is an alternative-focused asset manager called Ballast Rock Asset Management. And that manages funds across real estate, private equity, and of course, venture capital, where we have both early stage and growth stage funds. I'm the Chief Investment Officer for Ballast Rock Asset Management, and I'm also a registered representative for Ballast Rock Capital.
Right. And so, Simon, let's talk about the current startup environment. How has it shifted? I mean, we know valuations have been reset as, from prior to COVID to where we are now, and capital is being, it's more discernible in terms of where people are deploying capital. How do you view the current startup environment?
So for us, it really depends whether you're looking at early stage versus growth stage equity. But absolutely, the funding landscape has really fundamentally shifted over the last couple of years. And right up until 2021, which was essentially a sort of high watermark year for both number of funds investing, valuations, and amount of capital investing, we've seen a big pullback both in the number of investors active in the space. In fact, they've almost dropped by 50%, but also the amount of capital and checks being written has also dropped by a similar amount. So 2023 was down about 50% versus peak levels of funding in 2021. With that scarcity of capital has come a real focus for both VC funders and also startups themselves on how to focus on, number one, extending runway and doing more with less, but also really focusing on ensuring that you have a really marketable product, a well-defined product, a well-defined customer base, and crucially, a clear pathway to profitability. Whereas a couple of years ago, you could raise future rounds based on growth trajectory alone and assumptions about forecasts about how the business was going to grow in the future. That's really challenging nowadays. And in fact, it's really a struggle for any startup to raise on the same basis that they did just a couple of years ago.
Mm-hmm. David, would you say that the barriers for entry when it comes to entrepreneurship or launching a startup is higher than it would have been, let's call it pre-COVID?
Well, certainly there's an expectation that businesses have their house in order as they're starting to go out to raise. So we're seeing certainly more of we're seeing more users come in for the accounting needs of our business, which indicates the need to have an accurate picture of their financial health, where in past years, it was largely about the revenue and giving more sales tools. Let me drive my revenue. But today, having an accurate picture of their financial health signals to us that the barriers to entry and the right to play have changed, and they're really looking for sustainable businesses. And we're starting to see that trends in our users' behavior.
Mm-hmm. Christine, wouldn't you say that's a good thing, though?
Well, absolutely. I think it should have been a focus in the frothy market that we had in 2020 and 2021, but we had our eyes on other things, having raised money during that time period, like at the height of when money was easy to come by. It's just such a stark difference now in the landscape today. And, you know, to Simon's point, it's been almost 2 years since we've been in this unfavorable market in terms of raising money. So a lot of companies, if they've not been able to extend that runway or focus on profitability or, you know, cut team members, it's almost every week I hear about a company I knew that's, you know, potentially no longer around because they weren't able to manage that burn or grow and kind of reach those milestones that they had set out to. So any company who's, you know, in that in-between spot, in between seed, A, B, you know, I definitely err on the earlier side. Simon could probably comment better, even David comment better on those later stages and, you know, what's happening in that landscape. But if you're not revenue producing to a substantial amount right now, there's very little funding available to you.
Right. Simon, would you say that the macro environment has impacted this space as well?
Yeah, I mean, look, this was all, the catalyst really was, we had almost 10 years or whatever it was of a zero interest rate policy environment. That all changed when the Fed started raising rates, and essentially the music stopped playing. So exactly to Christine's point, companies that were essentially propped up by cheap or almost free capital, people quickly realized there wasn't really a fundamental business there. So it's really very much been driven by what's going on the macro front, where everyone's cost of capital has gone up, right from VC funds, that's driven by their LPs. That's what's really brought this focus on profitability, sustainable growth, and this sort of really managing your burn and managing your runway. 2023 was a great example where those companies that tried to raise, really it was only those companies where there was a clear path to profitability, because to Christine's point, those companies that weren't demonstrating that growth trajectory or that path to profitability either weren't raising or faced significant resets in valuations, and in a lot of cases ultimately led to those companies either exiting or being taken over by somebody else. But it was all driven ultimately by changes in the macro environment.
Right. And you know, David, we're seeing this in the public markets as well, whether it's microcap or small cap companies that are interest rate sensitive and cost of capital makes it challenging for their balance sheet. But there are a handful of them that have been operating efficiently and, are growing. So, just the excuse that interest rates are too high sometimes doesn't necessarily fly when you're looking at the underlying fundamentals of a business. So back to what we've been talking about, this valuation reset and cleaning up the balance sheets and looking at more board governance and having ARR improving sources of revenue. I think it's kind of weeding out some of the outliers here.
Oh, absolutely. Having a flight to great business practice and understanding your business is ultimately going to be a great thing. And so it really starts with, do you have a good understanding of your business? And we are seeing our customers understand that relevance more than ever. They need to have a financial picture of their health. They need to make sure that they're safe, secure, and compliant, and they want to make sure that they're doing it in the most efficient way possible. That should be true in whatever market that you happen to be in. It's pressing the need for that more than ever. So ultimately, I think what this is going to do is build some really great business practices for those that can weather this and get through this current environment. But really, those should be timeless needs of any business. It's just coming to the fold right now.
Right. Well, David, speaking of, we cannot have a conversation without discussing AI, right? So when you think about how AI is impacting the startup space, just having that story out there, but again, not having any way to prove what the use cases are of it, that's going to be critical as well. I think we'll be looking at that, a couple of years from now and really examining who was able to prove where AI, they were a differentiator in that space.
Yeah, in our space, we're seeing, going back to what our customers care about in terms of, do they have a picture of health? Are they saving time? And are they compliant? But there's tons of AI application available in all three of those areas. But what we're hearing from our users in particular is, one, they're not quite ready to take their hand off the wheel in that self-driving analogy. So yes, getting some support to save me time and give me more confidence, I'm there. But I'm not ready to trust my most critical business processes to an AI just yet. So they want to be able to have control as one. Secondly, they're very deeply interested in what's going on under the hood. And so for it to be a black box, I think that's going to put a lot of pressure on companies that are in the AI space. Can you show what it is that you're doing and still give your users the ability to have control? So I think it's still very early stages for companies to just claim AI as the panacea for solving all problems if it can't actually have a problem to solve in the first place. And I think we're seeing a lot of customers interested, but not quite ready to just give their most critical business processes away to, quote unquote AI.
Right. Well, Simon, from your perspective, when you're thinking about deploying capital to, early seed, early stage companies, where are you focused when it comes to AI? Not everything is necessarily about large language models or Gen AI. I mean, AI is bigger than that.
Yeah, for sure. It's interesting, and actually, another point, or to relate to the point I made earlier, when we talked about 2023 being down 50% from peak funding levels in 2021, that actually includes the AI bump, because AI startups, there was certainly a hype cycle or hype curve around a lot of these AI startups that are out there touting large language models, etc. Without those, the numbers will be even less. So AI focused startups have been able to raise over the last year or so in the sort of tougher funding market. A lot of that is around hype. I think some of those companies actually will ultimately be very successful. They are sort of out there solving the problems of the future. We are not an AI-focused fund, i.e. we don't just invest in AI companies. However, what we do see, and it ties back to helping our portfolio companies be more efficient with their capital, employ higher leverage with the team, ensuring they're getting the most out of the team, et cetera, is how can they employ AI, no matter what they're doing, how can they employ AI to give themselves the best chance of increasing profitability and ultimately increasing runway. So, for example, whether it's customer service, whether it's data analysis, for example, we've invested in a healthcare startup that focuses on remote patient monitoring called HealthSnap. They incorporate AI into their data review, the sales process. It really informs almost every stage of the business cycle of the customer journey, and it's really ensuring that you're using those in the right way. Now, to David's point, you're not delegating, full control to these AI services or models, but incorporating them in a smart way to help both you be more efficient with your time, with your team, and with your capital. We see as absolutely essential in today's environment.
Let's switch gears for a moment here, Christine, and focus on the client for a minute here. Most of your customers are RIAs. How are financial professionals addressing the type of market that we're in right now with their clients?
Yeah, well, you can't control the market, right? So I think in a lot of cases, advisors and planners that we work with, they're looking to talk about any other area of clients' financial lives but the market and their investment portfolio, and sending out that market update. So, talking about AI, how can you leverage AI to engage clients and the general public in more meaningful ways that you can actually help them control? And for example, your healthcare costs are a big way in which you can actually help them maybe save money in a different area of their finances. Or, we're recording this on April 15th. It's the tax deadline. A lot of, people that we were working with were offering comprehensive tax advice to their clients, again, because they can't control the markets, but they can maybe help their clients optimize their taxes. So there's now so many softwares, so much technology to help financial professionals go deeper in a lot of these areas, healthcare, tax, even estate, being another opportunity. And that's the same strategy that I think startups need to apply in their day-to-day. Like, your marketer is not only a content marketer, a social media marketer, maybe they're a growth marketer, maybe they're a product marketer. How can you equip them with more tools in their day-to-day job to help them do more, be better, move quicker? I think we're seeing that cross spectrum with our customers, and then leveraging that internally too.
Right. And David, perfect segue for you as we're talking about tax right now. For small businesses in particular, why is tax time especially stressful for them? And what types of solutions are being provided to help them manage this?
Well, for a small business owner, tax is one of the biggest not just days, one of the biggest areas they have to look at all year. And for many of our small business owners, they're not only the business owner, they are the marketer, they are the financer, they are the controller. So it's all on them. And when it comes to making good business decisions, good tax decisions, you need to have everything organized. You have to have a good system of record if you're going to make good decisions. And for many small business owners, where that starts is a shoebox of receipts and an Excel document. And that's not a great place to be come tax time. So tools like Wave actually consolidate some of the key business processes all in one place. Your accounting, your invoicing, reconciling your payments. And we're hearing more and more from small business owners that, one, they're feeling the pinch. So they're price conscious. They want to make sure that they're paying for the best value they can find. Two, they're inundated with tools. They don't want to have 17 different subscriptions and tools to make good decisions. So bring it all as much as they can under one roof. And that really mirrors what I think a lot of us are seeing in our personal lives. We're feeling the pinch. We have way too many subscriptions. We don't even know we're subscribed to, and we want to be able to bring that down. And small business owners are no different, where how am I being most effective, having things in one place so that come tax time, not only have I been spending and bring in revenue in an efficient way, I'm organized to make great decisions going forward. And because many business owners like ourselves in our personal lives, we do leave things last minute. We're not optimally organized. It is very stressful. And so tools like Wave and others, what we're trying to do is let's let the heavy lifting of tax and organization be solved through software solutions so that small business owners and entrepreneurs can focus on the other hard part of their job, which is trying to build a sustainable business, which is hard enough on its own. And most business owners did not get into it to try and do all the minutia and administrivia of tax. And so because it's, really unglamorous and not fun, people leave it till the last minute and they're not organized. So it's on us to make sure that we can help them in that regard.
So Simon, let's wrap this up and tie it all together in a neat bow here. Portfolio companies, they need to be agile. They need to be able to pivot and adapt to multiple environments, multiple markets, and they need good data and good management reporting to do so.
Yeah, absolutely. And it's something David touched on earlier. So again, we've moved from this environment for a lot of founders. The last 10 years, you've had very low rates. You've had a growth environment. You've now had a complete shift. And over the last couple of years alone, if you look at, we've had massive increases in Fed funding rates. You've had war in Ukraine, you've had COVID. Really, the only constant, as they say, is change. And having a founding team that is able to be agile and adapt to those changes is crucial. And part of that comes with having good data, which David mentioned earlier. So they really need to have the right sort of management reporting, management information tools that allow them to get credible sort of real-time data, and also working with good VC firms that can help them interpret that data and help them course correct as necessary. I think the next couple of years are going to be challenging, but as the old adage goes, some of the most successful startups ever were started during periods of recession or challenging macro environments. So I think the next couple of years are going to be really interesting for the people to get it right.
All right, and we'll leave it on a positive note. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.